Hello, everyone. I am so excited to be live this evening. Listen, I want to talk about the stress you feel in quarter one is often created by what you did not address before December 31st. So this is the best time for this episode, okay? Because when you get into quarter one, you do not want to feel any stress, all right? And here's the thing. This time of year is not just about closing your books, which is what a lot of consulting firm owners and business owners think about. This is the time to set your business up for greater profitability and healthier cash flow next year. And so in this live episode, I'm going to walk you through a year-end cash flow checklist for consulting firm CEOs who want more sustainable profits and healthier cash flow next year. So no matter where you're joining us from, make sure you say hello as you're coming in, leave your questions and leave your comments, okay? Welcome to another episode, another live episode of the Say Yes to Profits podcast. I am your host, Dr. Octavia Conner, CEO of Say Yes to Profits, which is a virtual CFO firm for established consulting firm owners on the cusp or beyond seven figures, okay? We help you turn revenue into financial clarity, a solid strategy, and healthy cash flow so that you consistently say yes to profits, hence the name. Now, what most consulting firm CEOs think year in is about is reviewing your revenue, right? And reviewing what happened. But can I tell you that that's wrong? Here's the thing. Revenue tells you what came in, yes, but profit tells you whether the year was actually successful, okay? Drop me some money bag emojis if you understand what I'm saying. Profit is how you keep score in business, you all, okay? Profit. Revenue is good. However, if you're not maintaining and you're not being able to say yes to profits and you earn a decent amount of money in revenue and yet you feel like the money goes out faster than it comes in, then you may not have a revenue problem. You may actually have a profit problem. And so I want you to change your mindset as we head into 2026 to understand that profit is your responsibility, not your reward, okay? Profit is your responsibility, not your reward. Drop me some money bag emojis if you know what I mean. Let me tell you this. Profit is your responsibility, but not your reward, meaning that most business owners will be like, oh, I hope I generated a profit this year, this month, this quarter. You should never hope. You should know because you ensure that you're able to generate a profit and you're able to smile when you log into your bank account because things are set up correctly. And so this is why I created this year-end checklist because I want to show you how to do that as we move forward into 2026. Lord, I'm going backwards, 2026. Here's the thing. This is why the first step in this CEO checklist, I'm going to share my screen because I want you to know the first step in this CFO checklist is not about revenue, which is your top line. It is about your bottom line, okay? It is about profit. And so in this checklist, your very first step is to review profit for the year, not just revenue, all right? I want you to stop focusing so much on revenue. Yes, you need to bring it in, and yes, revenue feels good, but if you're reviewing revenue for 2025, it is already a part of your historical pattern, right? It tells you what came in. It does not tell you what stayed, right? Profit is what fund your payroll. Profit absorbs your mistake. Profit gives you room to make decisions, okay? If profit was thin for 2025, if profit was unpredictable, if it was unclear, then revenue growth actually didn't help you that much, okay? If you are not able to generate a profit. And so at the end of the year, you need to answer 3 non-negotiable questions. And I want you to write these questions down. You can even rewrite them in the chat as well, okay? So the first question I want you to answer, and I want you to hear me really clearly. The first question, as you're reviewing your year-end information and preparing for 2026 is, which services actually produce revenue this year? That's question number one. Listen, when you understand which services consistently delivered a profitable margin for your business after delivery costs, after your team costs, and after your overhead, that's more than likely the service that will lead you to building a profitable business where money is not a problem. So that's question number one. Question number two, which services required, hear me clearly, the most effort for the least return? All right. Those are the offers that often look good on paper, but they drain you. They drain capacity. They drain your time. They drain your team. They drain your money. Like, they increase in activities without increasing your financial strength, without making sure you have more money. So that's question number two. Question number three you want to ask yourself is, which clients drained your time, your energy, or your cash flow? So I want you to look back at your clients for 2025 and identify the ones that paid late, identify the ones that did scope creep, identify the ones that were challenging, identify the high demand clients, because these clients are quietly reducing your profits even if they paid you a substantial amount of money, because you may be working more to meet their high demand, or your team may be working more. So it looks like they've given you a lot of money, but yet the profit for that client wasn't significant enough to carry them into 2026. Here's the thing. If you cannot clearly see your profit by service and by client, okay, next year will feel heavy no matter how much money you earn, no matter how much money you make. Growth without profit clarity always create pressure. So here's what I want you to do for this very first checklist item. I want you to write down your top 3 services and your top 3 clients. But I want you to rank them by profits contribution, not by the revenue that you earn. Then I want you to identify one service that needs restructuring, that your price needs to increase, or a client that you need to remove altogether. Okay, this is action item number 1. This single exercise alone often reveals why consulting firm owners and business owners feel busy, but yet their bank account is sitting on sickness and it's not right. All right. So that's item number 1. All right. Let me know where you're joining me from. Drop some money bag emojis. Do hashtag live or hashtag replay if you're live or you're watching the replay. Okay. So that's item number 1. So let's go to item number 2. Item number 2 that you want to do before the 31st is you need to understand your cash flow timing, okay? Most consulting firms, most service-based CEOs do not have a cash problem. Hear me clearly. You may think you have a cash problem because you look at your bank account and it's not where you want it to be, but you may not have a cash problem. You may have a timing problem that feels like a cash flow problem, okay? During the end of the year, I want you to review 3 things. And I see a comment live from Riverdale. Hey! So here's what I want you to do, okay? I want you to ask yourself these 3 questions. How long does it take clients to pay you? Okay. You want to ask yourself, if you receive retainers, whether the retainers are supporting your delivery. So if you have delivery costs like your labor, your supplies, your materials, are the retainers that you're receiving in supporting the cost that is going out? And you want to ask yourself, how are expenses aligned with incoming cash? What do I mean? If you have a lot of expenses going out by the 1st of the month, but then your payments don't come in until the 10th of the month, you have a cash out of alignment problem that you need to fix. All right. Okay. If cash leaves your account faster than it enters, growth will always feel stressful and cash flow will always remain low. And so that's why sometimes business owners feel like they have a cash problem when actually you just have a timing problem. So I want to give you an action item for this one, okay? I want you to write down the average number of days it takes you to collect your money. And then identify one change you can make next quarter. So let me give you some examples of those changes. You can change to upfront payment. You can give them like a discount if they pay you a large sum amount based on the project up front. You can shorten the invoice terms. So a lot of business owners will do in net 30, doing, net 60. You can say due upon receipt, right? You can also do automatic payments. So instead of you waiting for the money, you automatically charge their card or pull the ACH at a set time based on your agreement. Those type of things can stop the timing problem that you have and not the actual cash flow problem, because you may not have a cash flow problem. Okay. So that's item number 2. All right. Drop me some money bag emojis if you understand that. Let's move to item number 3. So number 3 is to validate pricing decisions. Here's the thing. At the end of the year is when pricing mistakes become clear. And so I need you to ask yourself a few questions before the 31st, okay? Question number 1, you want to ask yourself, did you discount to close deals? So throughout the year, did you find yourself, and let me know in the comments if you've done this, right? Did you find yourself discounting your services in the midst of a sales call to close the deal? Okay, you need to go back and look at that, because there may be some emotional things there. There may be some fear there that they're not going to close, and you feel like you have to do that. When in actuality, what you might need to do is just stand flat-footed in confidence, because you know what you bring to the table. Okay, I want you to ask yourself another question. Did scope creep happen? And if it did it reduce my margin? Right? Scope creep, I have a whole episode on this, is when these clients are constantly asking you to do stuff, and you do it, but yet you're not getting paid for it. If you go back and you add up the time you and your clients have dealt with scope creep, you probably are leaving money on the table that you shouldn't, right? And you may need to restructure your prices. Question number 3. Did pricing stay the same for a particular service, client, or project while the cost increased? That's another question you want to ask yourself. Here's what I know. Most consulting firms often grow their revenue while their bottom line and their margins shrink, because they're not paying attention to the things that I just told you to ask yourself. So the action item for this particular one is to identify one service that needs a price adjustment and adjust that price before January 1. One service, one client, one project that you know was scope creeping taking place. You know the client was high demand. You know your expenses increased. Like, you know something went incorrect with that particular project, client, or service. Adjust the price right now before you get into the new year. All right. So that's item number 3. Now let's move to item number 4. So item number 4 is to understand your tax exposure. Okay. Here's what a lot of business owners do. They wait until April, March to think about taxes. Tax planning does not happen in April or March. Hear me clearly. Tax planning does not happen in April or March. Okay. This is the time that you actually should have already been thinking about taxes. Okay. But if you have not, this is the time. And I want to give you some things that you should know. All right. As we go into this new year. Number 1, you should know roughly what does your tax liability look like as we go into this new year, or what does your tax exposure look like as we go into this new year. Number 2, you need to ask yourself whether your current entity structure supports your growth as you go into the new year. So are you an LLC, and in the new year need to be an LLC taxed as an S corporation because you know that your bottom line is going to be more than $40,000, $50,000, $60,000 for the year? That's something you need to ask yourself right now, because there's a deadline as we get into the new year that's at the top of the quarter, the first quarter, that if you want to switch to another entity, you have to fill out the paperwork before March 15th. So you need to be thinking about that right now. You actually should have thought about that a long time ago, okay? But I digress. So number 3, you need to know if your income timing, the decisions will reduce unnecessary tax pressure or liability. What am I talking about? So around this time, you should be thinking about if you should send that last invoice before the clock strikes 12 on December 31st, or if you should wait until the new year to send that invoice. Does that make sense? Let me know in the comments if that makes sense. Why do you want to think about this? Because depending on your tax liability or your potential tax liability, it may be a benefit to wait until the new year to send that invoice instead of that money showing for this year. Okay? That's something you and your CFO should have talked about by this time. But if not, I want you to think about that. Also, this is the perfect time. We only got a couple of more days left to think about, maybe I need to go get some more equipment or, some more things so I can reduce that tax pressure, that tax liability that's going to happen next year. Because when the clock strikes 12, it's too late to do that. When the clock strikes 12, there's really only one tax strategy that you can use after the clock strikes 12 to benefit for this year's tax liabilities or to reduce this year's tax stress. Okay, so that's something you need to think about as well. All right, ignoring this step usually leads to panic and a higher than necessary tax bill. So what is your action item for this particular step? I want you to sit down and estimate your current year tax liability and identify 1 to 3 questions that you can send your CFO or your tax accountant right now before it is too late. Because again, when the clock strikes 12 and you haven't done what you were supposed to do from a tax side, it is too late. Okay? So if you have any questions about that, put that in the comments and I'll answer your questions in a minute. So that was item number 4. Now, let's move to item number 5, which is to set financial priorities for next year. And I'm actually going to show you, I'm going to share my screen and show you how to do this. But let me give you some guidelines first. Here's what I know. Most consulting firm owners, most service-based CEOs, goals sound productive, right? But they are very, very vague and they don't give you any guidance for how to really scale your business in the next year. So most consulting firm and CFOs or CEOs will say something like, oh, I want more revenue. I want more clients. I want more growth. And it's like, okay, what does that mean? What does that look like, right? Those are intentions, but they're not financial priorities, all right? They're intentions and they're very vague. I tell my clients and anyone that I talk to, you want to set what I like to call CFO level priorities, which makes your goals specific, measurable, and timely, right? They give structure and they give strategy to how you need to price, who you need to hire, how you need to invest, and what decisions you need to make next year. And I'm going to show you how to do this in just a second. And at a minimum, I highly recommend that you set at least 4 areas of financial goals for 2026 for next year. So let me tell you what they are, and then I'll go over how to do them. First, you need to set your profit target. You notice I didn't say your first goal is your revenue target, right? I set your profit target, okay? This is not a number you're hoping for. This is not a number you're pulling out the sky. This number is matching what you need to have left over in order to do certain things next year. For example, we have clients that will say, well, Octavia, I want to buy a house in 2 years. I want to buy a building in 2 years, so on and so forth, right? We've worked with several clients where we've helped them do that. And we started with what your profit number needs to be. Now let's work backwards. Does that make sense? Let me know in the comments if that makes sense. Here's what you need to think about. What amount of profit does your business need to generate next year to support your goals, to support you as the owner and your salary, to support your team, and to support the growth and future investment of your business, all right? Without a defined profit target, revenue decisions lack direction. Hear me clearly. Without a defined profit target, revenue decisions lack direction. So your revenue comes in and it just does what it needs to do or whatever you want it to do. And none is really staying with you because you have no profit goals. All right. So the second thing, cash reserve goals. So cash is what absorbs surprises. It what reduces stress. It helps you have financial breathing room when you set cash reserve goals. So if you have a cash reserve goal, and I'm gonna show you how to do it in just a second, and your account is lower than the cash reserve goal, that immediately tells you something needs to happen ASAP, and you don't have to stress about it. It's like, oh, I see this number is lower than what it needs to be. All right, I need to do X, X, and X. It's so easy. What people don't realize is that your numbers, if you pay close attention to them, will help you build a profitable, successful, cash flow healthy business with ease. But when you're just operating day to day and you're not paying attention to your numbers, building your business becomes harder than what it needs to be. So a consulting firm or a CEO without a cash buffer is always reacting. They're always stressful. They're always feeling like they're on this hamster wheel where it's like feast or famine because they don't have a cash reserve. A cash reserve gives you safety and flexibility and financial breathing room. Okay, so those are the two things that I want you to have. The third thing is capacity limit. So I want you to think about the capacity that you and your team has right now. You don't want to bring on new clients and new work and you do not have the capacity to support that, right? More work doesn't always mean more reward. If your team is overworked or you as a CEO can't even take a vacation because you have to work. And so as we go into the new year, think about the capacity. So how many clients can you support by yourself? How many can your team support by themselves? And then make it a goal to scale profitably by bringing on new team members when the time is right. Okay? And then the fourth thing I want you to think about when you're thinking about setting your financial priorities for next year are your investment priorities. Hear me clearly. Every dollar has a job. Every dollar has a purpose, whether it is to support your team, to market your business, to get your numbers in order, to invest. You want to make sure you're managing your money with intentions and you're not reactive as you're managing your money. If everything in your business is a priority, then nothing is a priority. If you don't give your numbers direction, your money direction, and your money a purpose, then it's going to do whatever it wants to do. And you may find yourself often with not enough money in your business, and then you're still in this place where cash is feast or famine, and you can't really scale your company like you wanted to because you didn't put the actions in place, okay? So the action item for this one is that before the year ends, I want you to write down one clear profit target, one clear cash reserve target for next year. These two numbers alone will sharpen every financial decision you make going forward. And I want to show you how to do this real quick. So I'm going to share my screen. Okay, yep, you all can see that. So here's what I want you to do, right? When you're thinking about your goals, I want you to first ask yourself, how much do I want to have left over at the end of the year, right? So let's say at the end of the year, you're like, my profit goal, when all said and done, I want to have $750,000 sitting in the account when all said is done, right? You got to say, okay, so if this is what I want to have left over at the end of the year, and I know, for example, it's going to cost me, I don't know, on average, I'm going to say $900,000. For example, you know that's what it's going to cost you on average to operate your business. So you're like, okay, so my expenses for the year, and what you can do for your expenses, you could look back at what happened this previous year to see how much you spent on operating your business and costs and expenses. And then you can think about, okay, so do I want to add a new team member? Do I want to add some more software? Do I want to ... and get a total ideal number of your total amount you're going to spend in expenses for the next year. So we take our clients through this when they come on board as a CFO. We have a whole little spreadsheet where we plug and play the numbers in. But let's just say we know that last year you spent $700,000 on operating your business, and this year you want to bring on a new COO and I don't know, you want to take a business retreat trip or something like that. And so we've determined, right, that your expenses for this year is actually going to be $800,000. Okay, so You want 750,000 left over. Okay. 800,000 was what you had to operate last year. That means at a minimum, your revenue, if we just do simple math, should be $1,550,000 at a minimum revenue, because that'll allow you to cover your expenses and have a profit in the end. Okay. Then you go back and you figure out, well, how much of this 1.55 is the profit goal? Is it 30%, 35%, whatever it may be? So then you figure out that percentage. So let's say it's 35%. So now we know, for example, your profit margin is 35%. Guess what you can do with your pricing? You can go back and look at your prices and then ensure that you have a 35% profit margin in your price after identifying all of your costs. And then when that money comes in, the 35% will go to your cash reserve or your profit account. For our clients, we call it their financial peace account. So now when the money comes in from a client, you immediately take that 35% and you put it in your cash reserve account. And then the other amount is used to cover the cost of doing business every day and the cost of operating your company and the direct cost of your company or that project, that service, or that client. I have a whole episode on how to price for profit. But the thing is, you have to work backwards. What do you want left over? What are your expenses? What is the minimum amount based on this formula that you need to bring in? And then what is the profit percentage of that? And then you take that profit margin percentage and you put it in your price. And then when the money comes in, you save it. Does this make sense? Yes or yes? Let me know in the comments if this makes sense. Here's what I tell people all the time. Building a profitable business and having a company where money is not a problem is easy. But when you don't know your numbers, it doesn't make sense, because you cannot support your decisions by your numbers because they don't make sense to you. So you don't have the financial clarity. You don't have the financial control. And you definitely don't have the confidence because you don't know your numbers. So before the year ends, I want you all to do the 5 things that I put in this checklist so that next year is a profitable year. Now, if you want help with this, I am having a masterclass on the 21st of January. You can scan this QR code or you can go to masterclass.sayyesToprofits.com. During this masterclass, I'm going to walk you through strategies like this and much more so that in 2026, you have a profitable year. So it's going to be on January 21st of 2026. I think I just said 2025. But you want to make sure that you do things differently in 2026 so that 2026 is not like 2025. It's profitable, right? And money is not a problem because you know your numbers. The foundation of your business is your numbers. And so if you're operating every day and your money is not in order and you don't know your numbers and you can't do a simple formula like we just did and it tells you what your profit margin should be and what your profit should be, then you're operating your company incorrect or incorrectly, period. Okay, so during the masterclass, I'm going to show you these type of strategies and more. And then, of course, if you want accountability, if you want CFO support, if you want someone to help you turn your revenue into clarity, strategy, predictable cash flow, then you want to apply for a profit strategy session with me or my team. Now, during this session, it's not a sales call. We're literally going to look at your numbers. We're going to talk through your profit, your cash flow, and we're going to break down what you're missing, okay? We're going to identify your current reality, your desired reality, and your gap, and what you need to do to close the gap. And then, of course, if we can help you with that, we'll let you know that at that time, all right? To apply for a profit strategy session, you can go to session.sayyesToprofits.com. You'll jump on with me or my team, and we'll go over what's going on with you and your numbers so that 2026 is profitable, okay? So that, like my clients, you hit the money bell and money is not a problem, all right? So That was my time today. I hope this was helpful. If you're watching a replay, hit hashtag replay. Thank you all for joining me live today. I don't see any questions, so I'm going to go ahead and go. And Happy New Year, everyone. Toodles. Thank you for tuning in to another episode of the Say Yes to Profits podcast. Now it is time for you to make money moves. Take action based on what you learn. Now, see you on the next episode. Say Yes to Profits. Toodles.